All right. Welcome everyone to today's The Secret to Commercial Solar Financing webinar. It's what you need to know before engineering begins. We're going to give people just a few minutes, couple minutes to trickle in before we actually get started. In the meantime, if you've been to many of our previous webinars, you know that I like to start off with a dad joke. So joke's on the screen. If you'd like to take a crack at it, don't spoil it for everyone in the chat. Or you can if you want to be that type of guy.
Or girl.
Or girl. Exactly.
When is a door not a door?
Would you like some thinking music on top of this? Let me see if I can find a. I'm going to find a Jeopardy theme.
We've got some comments in the chat.
Oh no, comments in the chat. I've got, dude, I got doing YouTube, so many ads these days. Can you guys hear the music in the background? Or is that being filtered through my...
Quietly.
All right, welcome everyone. We're going to give it one more minute for folks to join, but while you're waiting, take a shot at the joke on the screen. And also go ahead and tell us in the chat who you are, where you guys are calling from. I am personally calling from Austin, Texas, where it is a cool 100 degrees today. Oh, look, the Price is Right theme song now.
Here in Florida, it's 88, Scott, so I feel for you.
Stormy.
All right. And Cooper, where are you calling from?
St. Petersburg, Florida. In the middle of a thunderstorm right now, so.
All right. So I'm gonna stop the Price is Right theme song right now. Let's get into this. We'll get started, but first, the answer to the joke. When is a door not a door? When it's ajar. All right. Okay, I'm gonna stop this now, and let's get into the conversation itself, into the webinar. Okay. All right. Thanks everyone for joining today. I am Scott Wynn, head of growth at One Ethos and CEO of Bodhi. I'm your moderator today. And if you guys don't know, since you guys are one of the Ethos installers, Bodhi is a customer experience platform that is free for all One Ethos installers. So if you guys are interested, go to the Bodhi.solar website, book a demo, and we can go from there. All right, so why are we all here today? Well, when everything in the world is going up, gas prices, mortgage rates, Climate First Bank just announced a rate cut on their new commercial solar loan. So 30.5 years at 7.99%. But having a great rate is just one part of the equation. The rate does not matter if the deal never gets underwritten. So for most commercial solar deals that don't, and most know that commercial solar deals don't fall apart because the system design is wrong. They fall apart because nobody asked the financing questions that early enough. And so unfortunately, this means like a lot of engineering time can be wasted. And then it can also happen that the customer who you're selling the project to isn't too pleased. So that's what we're going to cover today. And so by the time we finish, you should be able to do 4 specific things. First, you're going to be able to spot the fast track opportunities that can actually move a commercial deal straight through from submission to approval pretty quickly through the underwriting process. 2, you're going to know when manual underwriting is required before you actually set your customers' expectations. 3, you're going to be able to use the new commercial solar Prescreener tool that we've created. And you can use that as your first pass readiness tool. And then 4th, you're going to be able to coach your customers prepare the right documents that the underwriting is needed for the approval process. So key thing is that if you take one mindset shift from today, just make it this one. Engineering starts after the initial financing screen, not before. And so to get you guys there, I've got two people with me who do this every single day. Joining me today is Dima Headley, SVP and Director of Digital Banking at Client First Bank. She leads the digital banking organization behind both the residential and the commercial solar lending programs. And you probably already know her from the residential side, but she is the person who can tell you not just what the policy is, but actually why it is what it is too. We also have Cooper here, who is the commercial solar digital banker at Climate First Bank. He's the person on the other end of that commercial deal. He works with borrowers and installers every day on the qualification, the structuring, and then just getting those applications over to a decision. So if you ever wondered what the underwriter is actually looking for, Cooper is that guy. So Dima, Cooper, welcome to the webinar today.
Thank you.
Thank you, Scott.
So we're going to be dropping the LinkedIn profiles into the chat if you want to connect with any of us directly. And so can we do that real quick?
I'll do that for you, Scott.
Appreciate that. Okay. All right. One housekeeping note. Please drop your questions into the chat at any given time. You don't have to wait until the end of the webinar. We're going to be watching this throughout. Cooper's going to be trying to answer them. I'll also try to pull in these questions into the conversation as we go. And so also, if you actually have live commercial deals, if you have that you really you've got some questions about, let's bring those. And that's exactly what we want to talk about today. So before we dig in, I do want to get a read of the room. So we're going to do one quick poll here. Let me share that. Poll and share. All right. How much commercial solar are you doing today? 1, commercial all the way. 2, a mix of resi and commercial. And then 3rd, mostly resi, looking to get into commercial. So please go ahead and give us your answers there. And I think these are, you guys, I think all the audience members can see it. So Dima, what do you think this is going to be in the end?
I think it's going to be a mix, but possibly a lot of resi installers that are going into commercial, especially with 25D sunsetted at the end of the year. It's definitely an aspect to go into.
Cool. Okay. All right. So we got about 59% of the audience answering. It does look like there are a lot of mostly resi looking to get into commercial, but there's the majority is a mix of resi and commercial already. Dima, does that surprise you at all?
No, I think that sounds about right now.
All right. So let's get this. All right. So let's get going here. Dima, Client First Bank just announced the new commercial solar loan that I touched on at the very beginning, 30.5 years at 7.99%. Can you tell us a little bit more about it?
Absolutely. And I believe we have a slide too, Scott, that we can share on this one.
Let's do that. There it
So
goes.
Thank you. Not only did we drop the rate to 7.99%, previously it was 8.99%, so it's a whole 1% discount there. We also expanded the actual term. So from 25 years, it went to 30 years. It says 30.5 because the first 6 months is interest-only payments. That's the construction period. So that's huge right there. The loan size and the amounts, that hasn't changed. Our minimum is 25,000, and it can go up to 25 million. That's our legal lending limit. That can fluctuate based on the legal lending limit on there. But team, what I want to highlight especially is the 30-year term. That's going to help actually pencil in, make it better, where the utilities will offset, the loan payment will offset the utility bills that they have. So definitely look at an eye on that. And then the rate, 7.99%. Fixed rate, mind you. It's not a variable. If the customer wants to pay it off before 30 years, they absolutely can do so. There's no prepayment penalties. So it's huge on that aspect. The fee structure is staying the same. It's 1.5% of the origination of the contract amount is the loan origination fee. And there's a $950 setup fee, which will actually be paid by the borrower, not the installer, not the bank. The borrower will pay that, and they can roll it in to be financed. They don't have to come out of pocket for it. And lastly, the actual collateral is still the equipment. We do a UCC1 on the equipment itself located at the property on a state and county level. So there's no liens or mortgages associated with it. The payment structure, like I shared, the first 6 months is going to stay the same where it's interest only payments to help offset that aspect where while you're doing construction, they don't have the utility bill plus their loan bill. And then the remaining 360 months will be amortized with the principal and interest payments over the 30 years. The real estate collateral is required on there. It's UCC filing. The loan term should be matched against the eligibility of the underwriting path. These are things that you should understand and know clearly when you're speaking with your customers. But what do you guys think about the 30-year term at 7.99%? Do you think you're going to be using that a lot?
One uh, one comment from the chat. Can you
Slow
slow down a
down.
little
I
bit,
just saw
Dina?
that. Sorry, guys. I get excited when I talk about this right here. It's the first ever, I think, where in the market there's no 30-year commercial solar loan product out there. So the key highlights on this page right now, we launched the 30-year commercial solar loan product at 7.99%. It is there's no other products out there. There's no dealer fees. That fee structure, the 1.5% and the 950, that is not a dealer fee. That is loan origination fees. So that is going to be rolled in as the cost of doing the loan. So they will actually have that rolled into the loan to be financed if they want to. And again, the equipment that we're using is not a lien on the property. It's a UCC1 on the equipment, the solar equipment on a state and county level. So the biggest thing, and I'm going to say it extremely slow, is the 30-year product at 7.99%. It's not out there in the market right now. If you were to pencil that in, it will help your borrower be able to possibly get financing because it's going to offset the utility costs, also help you win that deal, right? Because you're going to have a smaller payment for them and there's no prepayment penalty, so they can pay it off at any time.
Yeah, I think one of the other commercial loan options that are out there, I think at least the main one that I know about can go up to 20 years. And so this 30-year is definitely a difference there. All right, so one big question. So, I mean, the commercial loan terms, from what I understand, like I said, this is probably the best that's out there, but I want to try to dig in a little bit more. These commercial projects are notoriously, they're notorious for having really long sales cycles. And so with a rate like that on table, why do commercial solar deals still fall apart? And when they do, what does that actually cost the installer?
No, absolutely. So from what we've seen so far is when the deals are falling apart, it's because it doesn't have all the information. It's not a packaged deal completely. So it's important as the installer um, to understand why financing should be before you actually complete the engineering, right? You want to make sure that the business is not titled incorrectly, that you have the right business on there. The ownership structure, that's huge. When a borrower is applying, it comes in the back end, we realize that they don't actually own the property that they're going to place those panels on. That can be a decline on that aspect, and it's a deal closure for you too, right? And then if we don't have all of the documents, the financials that's needed, the tax returns, profit and loss statements, balance sheets, debt schedules, things like that, we need to have a full package to review that. I can't tell you how many deals we've looked at, and Cooper, you can attest to this too, where they haven't filed their tax returns in 4 years. They wouldn't qualify for that. We need to be able to see the finances, right? So having those conversations, we don't want you to collect the documents. We don't want you to try to underwrite it, but just having a conversation with your customers, making sure that they have their ducks in a row, essentially making sure they file their taxes, they have their financials in place. Um, It'll help us be able to have that full package and be able to turn it around. And you don't want to start engineering when they don't have a full package. It's not a company worth pursuing, essentially, right? They don't have their stuff together. So when you have those conversations, you can see the red flags to make sure that you are capturing the needed information. If they don't have it, you can coach them to make sure that they have their ownership structure in point, looking at the property appraiser, see how it's titled, make sure that they have their financials, that they are filing their taxes, they're completing their year ends, or they have an accountant on that aspect. The next part is the debt service coverage ratio. And we're going to go into it a bit more in details later, so I'm not going to touch on it too much. But if it's an owner-occupied deal, the debt service coverage ratio is different than when it's a non-owner occupied deal because it's more risk involved there. Sometimes it has to go through a manual path if it's non-owner occupied because we have to get a little bit more creative and we have to dig in deeper and ask for more information. So the owner occupied deals are definitely more straightforward. What I will share as a rule of thumb is on here. If the borrower story is complicated, don't wait until the engineering to find that out, or to bring it to our attention. Introduce us. We're here to help support you. If you have a deal that you want to run through, there's some tools that we're going to share with you today as well that we believe will be beneficial for you.
Yeah, and I think that's really where Cooper comes in, right? And so what you're talking about is this story. It's about the sequence of getting the information at the right time. And so, Cooper, can you actually start walking everybody through what the right sequence looks like?
Absolutely. 1 second, trying to answer all these questions here in the chat.
Oh, Dima can take over that one for
Yeah,
you.
Dima, you
I
can
will.
take over that. Yeah, so I'm gonna kind of go through the process of kind of the commercial timeline here with you guys of what we're kind of looking for to start, and then through underwriting, stuff like that, application, and then towards approval and funding. So the first thing we're going to start with is pre-qualifying the customer, and we're gonna show you this pre-qualifying tool a little bit later that you guys can use in order to kind of vet your deals and see if it's something that's likely to get approved, if it's something that maybe can get approved but requires a little more manual underwriting, or maybe it's a deal that like we just don't have an appetite for based on risk or whatever that may be. So we'll kind of give an example of that pre-screener, and just show you guys how you can use it to kind of see which deals we're going to want, which deals we're not going to be able to take on. For our second step here, and this is even going to be before the referral and stuff like that, we want you to kind of coach your borrower up on what documents they're going to need. We found that one of the things that kind of delays the application process and the approval process the most is not getting a complete package from borrowers. So a lot of times they won't submit correct tax returns, or they won't have tax returns ready and that sort of thing. So kind of right off the bat, we want to make sure that you guys are letting them know what kind of documents they need to get collected and that sort of thing. So we just give them that time to basically get that stuff together, so we can guarantee that they have that complete package when it's time for underwriting, because that'll just make the process quicker for everybody. And then number 3 here, so this is going to be when you guys are going to fill out that first application, the first thing on the pre-screener, or sorry, the One Ethos portal. Basically what you guys will do is there's system details. You basically put in the address where the system will be located. You'll put in the total cost of the system, whether there's any batteries, stuff like that, and the cost of those kind of things. And then that's basically when you can calculate the monthly payment for the deal, and then you'll be able to refer to the borrower's the application. And so that's when we'll move on to step 4 here. So this is when the referral is sent. The applicant will actually have the chance to go in. They'll fill out everything they need to, the financials, that sort of thing, stuff like that. And then that's when it'll come to underwriting review. So that's when it'll go to our team. And then we'll have 2 different tracks, fast track and manual review. We'll go over that in the next slide there. But it'll come to underwriting, and that's when we'll kind of look at the financials, that sort of thing, see if it meets our underwriting criteria and all that. And then we can get step 6 here. Then we can get an approval out, work on booking the loan and getting the loan docs out and that sort of thing, and then move towards NTP and that stuff.
Mm-hmm. So let's go into more details. So where do you normally see, Cooper, that deals kind of fall apart?
Yeah, so I would say definitely during the underwriting process, there's a lot of times, like I said, where people are applying where they have negative net income and stuff, and they can't afford debts and that sort of thing. So that's why we basically brought this pre-screener tool for you installers to kind of see at the beginning whether or not your deals are going to be good, so we don't have to waste your time getting everything set up and that sort of thing, and we can kind of figure out from the jump, is this likely to get approved and stuff like that. But yeah, so these are kind of some questions here that you can ask the borrower and stuff to figure out early on whether this is going to be a good deal, so you guys aren't wasting your time. So one of the ones we'll start with is who owns or controls the property. We typically want owner occupied stuff. So we want to make sure that the borrowing business that we're underwriting based off of actually owns the property. So for an example, say it's an XYZ dentist practice or something. We want them to be the owner of the building where they're operating that dental practice. So that would be owner occupied in that kind of sense. So that's just one example of kind of what we're looking for. So that's a good starting question to ask. We don't want a lot of stuff necessarily that's that somebody owns the building and then they have multiple tenants, whether that be like a mall or something like that. So we want that to be owner occupied. And then another thing we want to look at is how long has the business operated. So typically we want businesses that are, been operating for quite some time. They have steady cash flow and that sort of thing. We don't have a huge appetite for businesses that are just starting or only a year old, because we just can't determine that financial history, and it makes it more difficult to determine the risk that we're going to underwrite to in that context. And then, like I talked about, is the business profitable? We want to see a business, obviously, that makes money. If you don't make money, it's tough to pay your debts. Obviously, we want to get paid, so we want to make sure that that business is profitable. They don't have bankruptcies or anything like that, and that they've been, good at paying their debts and that sort of thing. The fourth thing we look at here is kind of the business owners themselves. We also require that everybody that's a 20% or more owner of the business is a personal guarantor. So that's why we kind of ask that question. So if there's a lot of times for a example case, a lot of times a husband and wife are usually owners of these small businesses. So in that sense, we'll want to make sure that both of them are guarantors on the loan if they both share like 50-50 ownership in the business or something like that. And then, like I talked about earlier, we want owner occupied. Just because it's not owner occupied doesn't mean it doesn't have a chance of approval. But owner occupieds are kind of our bread and butter, and kind of the thing that we really like to see in our deals and stuff like that. Because also the DSCR, which we'll go over a little bit later as well, will change. It's basically an underwriting criteria. It'll change whether or not it's owner occupied or non-owner occupied. I think that's all for that one, Scott. All right.
Mm-hmm.
If I may just
Yep, go
share
ahead,
really
Amy.
quickly, there's a couple questions in the chat that talks about if we're going to go over anything differently. We are actually, if you guys could hang on, we have a new tool that we're going to demonstrate for you and share with you guys for commercial specifically. So I think it's going to be a great asset for you to use as you position these deals. So we'll be going over that shortly as well. It's actually the highlight to help you understand if a deal's worth pursuing or not.
Correct.
Mm-hmm. Yep. We're also going to do a demo of the portal for those that are relatively new to Climate First Bank as well. So from here, I mean, you mentioned the preferences that you have, but then it doesn't mean that those that don't meet the preferences will get declined. And so you had mentioned to me that there are two paths,
Yep.
Cooper. So can you explain that a little bit more?
Yep. Thanks, Scott. Yeah, absolutely. So like I talked about, the ones that are kind of going to be our like bread and butter kind of Goldilocks are these FastTrack ones that are under $500,000. So these are basically going to be ones that meet all the criteria we're looking for pretty much, and ones we can, when you guys submit an application, when your borrowers submit an application, we can get them turned around in, a couple business days and that sort of thing. So these are the ones that we can really get approved fast. Kind of talked about a little bit already, but the things we like to see, standard commercial borrower and clear ownership structure. So like I said, owner occupied. We have information for all the owners, if it's a husband or wife or whoever, if it's a partnership. Like I talked about earlier, required documents uploaded. That's a huge one there. The faster we get all the documents for the package and that sort of thing, the faster we can get it approved. So for that stuff, we like to make sure we have everything right away, because then we don't have to go back and ask the borrowers for extra financials and that sort of thing. Like we said, all owners meet credit and bankruptcy expectations. So this would just be all the owners having above a 680. That's our minimum credit score for our commercial loan financing. And then the project story is clean enough for faster decisions. So that goes back to that kind of that owner occupied stuff, and just making sure that whoever owns the business is operating in that as well, and the business is generating cash flow and that sort of thing. So those would be kind of like our perfect deals, to where we can get those turned around really quick for you guys, and get an approval for you. And then the other side, Dima, were you going to say something?
No, I was going to just say for the manual underwriting, there was a question, which I think would be able to answer. They're asking, what's the turnaround time, the average turnaround time for a manual underwriting? Just to answer that question, and Cooper, you can add on to it too. It's going to depend on if we have everything, right?
Mm-hmm.
If we have a full complete package, and say within 3 to 5 business days, we can have an approval decision.
Depends on size, also loan amount. If it's like a large multi-million-dollar deal, that's going to obviously expand the timeline. Underwriting timeline, just because it's a lot more in depth and more approvals required from our end. But yeah, even for the manual underwriting ones, we can definitely, if they're that 500,000 to 1 million, 2 million range, we can get those still approved relatively quickly as long as we get those full packages with everything up front, just because it reduces the communication back and forth between us and the borrower. So that should be a main sticking point for you guys, is complete packages. That's going to be the biggest thing that will help get your deals approved faster. So the more you coach that into the borrower, the faster the turnaround time is going to be. And then other things that are manual underwriting, your nonprofits and stuff like that will take a little bit longer, just because it's a little bit different in terms of, obviously they're not for-profit businesses, so we have to take a look at some other stuff involving those in the underwriting. Same with non-owner occupied. We talk about that. It's a little bit riskier for us, so we just have to do a little bit of a deeper dive and stuff like that. But yeah.
And one question that popped in here, and we'll go ahead and answer this live, is solar plus roof replacement. So can one of y'all speak to not just the solar part of the project? Are there adders that can also be financed?
Dima, do you want
Yes.
to take that one? Yeah, go.
Sure. Yeah, you can. So with the product similar to residential, we allow adders. So you can do a roof replacement, you can do batteries. If there's electrical upgrades, you want to do HVAC systems, things like that, we can include that into the financing as well. It's solar plus for the enhancement. On the portal, there's a list of items that are approved adders. So you want to follow that. And lastly, when you have your contract, it does have to be itemized. So if there's a roof replacement, you want to itemize what the cost of that roof is. If there's batteries, you want to itemize what the cost of the batteries are and how many in the production for the batteries. Also, with that, keep in mind we do still have a price per watt cap of $375, and that applies to commercial as well. So within the portal, there's tools that's built out for you to capture that information. We'll just do a demonstration of that to show you as well.
Okay. Is there any specific anything that on the commercial side you've seen, Dima or Cooper, where they've tried to get it financed but cannot be financed?
In terms of adders?
And in terms of adders, exactly.
Go ahead, Dima.
So I think the biggest thing we've seen, it's windows, doors, things like that. Any type of structural upgrades, we will not include that in the financing. It is a solar loan for commercial. So think about it this way: as you're doing adders, it's something that's going to enhance the solar system. A roof replacement makes sense because if the roof needs to be replaced in 5 years, it doesn't make sense to add a new system to it. So we'll go ahead and add that into it. HVAC, that helps with the overall energy efficiency of the product. We added that into that as well. Electrical upgrades, things like that. Carports, we'll allow that financing if they want to do a carport system to be included, but everything has to be itemized. So the best rule of thumb is if it's going to support the solar system, we can include it as an adder, but we do have the approved adders listed on the website on our portal as well.
And Dima, EV charging stations. We can.
Yeah.
Yes, we can do EV charging
yep.
stations as well.
Yep.
Oh, that does. Okay, so that's news to me. I will have to tell some installers that is now a yes. Wait, but that's solar plus EV charging, not EV
correct.
charging separately.
Yes.
Okay,
It has
that's
to have
good
a
to know.
solar system. Yes.
Perfect. Okay. All right. So now that folks know about the loan, what can be financed, how to kind of screen it, Cooper, can you actually show everybody how this would look like within the portal?
Absolutely.
Yeah. All right.
Are you
so
sharing,
I
Scott?
think I have to do this.
Yeah,
I'm going to share if I figure this out. So give me a moment, everyone. And here. Yeah. So walk me through. I'm going to be driving this in terms of like punching in numbers, but you talk it through.
Yeah. So this is going to be if you want to switch it over to commercial, I think you're on Resi right now.
Okay.
I'm sure most of you guys have used this platform for residential or commercial one way or the other if you're onboarded installers with us, which you all are. So it's going to be pretty simple. We're just going to start with what the business is. Scott, you can just make something up, whatever you want. Scott Solar. There you go.
There you go.
And then you're just going to put in the address where the panels are going to be located on. So you want to make sure this is the physical building that the panels are going to be on, not the address of the borrower or something like that. And then standard solar, that's going to be your only option there for commercial. And if you have like a Tesla roof or anything, it's still going to be standard solar. We don't have a breakout like we do for residential. And then here, this is where you can break down kind of if you do have adders and stuff like that. So for our solar system, we'll put in the price of the solar separately so we can get that price per watt calculation there. So Scott, if you just want to do like, 350,000 is perfect. And then system size, do something big enough to get us under 375.
Okay. How about, okay, so let's do, so do you want to do something small?
Yeah, do something small. So you guys see where it says the price per watt
Yeah, do like
is
$100.
$35.
Oh yeah, so we don't want that.
Yeah,
Who
so
sold me
it
that
gives you an
deal?
error message at the
Yeah.
bottom.
Yeah. So
Where it does tell
375
you.
is our max price for watt. So it's got to be under 375. There we go. So that's perfect. And then if you have any adders, like we talked about earlier, you can put in the roof price. We just want to make sure everything's detailed out on the contract and in this application as well. So that just helps us.
Okay. Let's say I was also doing a HVAC upgrade, $50,000 there. So one question that a lot of folks have asked, at least me on the residential side, are there any caps on the adders themselves or just on the solar only portion, PV portion?
At this time, there's no caps on the adders. This is something that we're looking into right now. The only caps that we have is the minimum for the commercial solar portion. It has to be 25,000, and then there's everything else could be added into it, but it has to be itemized in the contract.
Mm-hmm. Okay. All right, Cooper, keep going here.
Okay. Sorry, I was trying to answer your question.
Okay.
Okay. So then, so we got our total system cost here, and then you'll enter in the utility bill before solar and average monthly utility projected after solar. Yeah. So make this pretty spread apart so we can get one that has cost savings, Scott, if we can. Yeah, it should be.
Okay.
And then so once you have that, calculate your payment, and this will provide you the monthly payment down here. You can send to your customer there. So 383.3803 a month there, and it'll show the terms, no dealer fees, the interest only stuff, all that sort of thing, and then the rate, and then APR with the origination fee and stuff in there too, and the setup fee. And then this just has some loan
Okay.
information down here, what you can and can't share.
Mm-hmm.
And then now we can work into the pre-screener here if we'd like. So this is what we were talking about earlier when we talked about this pre-screener that you guys have the ability to use, that we want you to start off with at the very beginning to make sure your deals are vetted, and ones that we want to see, and ones that are going to have a high chance of approval. So we can just work through. The first thing we'll work through is kind of like I said, our Goldilocks deal, one that is basically perfect and will get a green outcome that has a high likelihood of approval, kind of be able to go through that FastTrack program that we talked about. So Scott, if you want to just, is the subject property owner occupied? We want to go yes with that. Is the business for profit? We like to see for profits. Usually those are going to be the ones obviously that have positive income and stuff like that. Business operational for 3+ years. That's something we want to see as well. We'll put yes there. Positive net income. Always want to see that, so we know they can pay their debts. So we'll put yes for that. And then, like I said, we always want credit score above 680. That's going to be, if it's under 680, it's going to be a no. So we're going to put yes for that. And then always make sure you fill out this monthly utility bill as well, because if you don't, you're going to see that that outcome at the bottom where it says yellow, incomplete, or non-streamlined profile. So that's just going to let you know you didn't fill everything out. So make sure you fill that out. And so that'll, you put in the 30,800. Yeah. And so this last part is just the savings. So now you see at the bottom here, green, likely approved. It'll tell you this has a high likelihood. It's eligible for streamline review. And basically it'll tell you the things down here. Like we said, we want to see owner occupied property, for-profit borrowing entity. We want to see 3 or more years operating history, positive net income, credit scores above 680, and a utility savings. So that's kind of the perfect deal for us, and the ones that we can really turn around fast for you and that have a very high likelihood of approval.
If I can,
Yep.
sure. On one thing I want you guys to know too is with this tool, it's your guide, right? You want to use it while you're having the conversation before you get to engineering. But if you have a prospect and you're talking to them, you're trying to understand it. We know commercial is not a overnight decision. It's a large loan. There's things you're going to have to build that relationship with the customer. Use this tool to your advantage. As you're speaking with them, you're having those questions. Are you profitable? Did you show a net profitable income every year over year? Have you been in business over 3 years? These are just simple questions you can ask them. And these questions, when you pop it into the tool, it'll tell you the likelihood of whether or not they can be approved. This is not saying that they are approved, because we do have to dig into it. There's some other factors. Also, the customer may not be telling you the exact information, but it's worth your while if you're having those conversations and you're putting this in there and you see it, to move forward with it, where you send them the referral link and they be able to submit the application to us. We see the full package, but use this tool to your advantage to have that conversation, see if it's a deal worth pursuing or not. Cooper's also going to share a couple other scenarios with you where it'll show on there.
Yep.
Okay.
So these will be, so that was all the stuff that'll give you a green, like this is likely to be approved. Now we can, Scott, we can just go through some of the ones that are going to be like an immediate no, kind of like these are very unlikely to get approved. We recommend not submitting them. So the first one, we can start with owner occupied up there at the top.
Okay.
So do no, and then
No.
select, like, we can do the short-term rentals or Airbnb stuff. You can do the Airbnb stuff if you want. So that's going to be a red there. So a lot of like those Airbnb short-term rental stuffs, the risk appetite on those is just too high, and something that we're not really looking to do at this point. So if it's somebody that just has one investment property or something like that they rent to Airbnb or a single family rental, and they just want to put solar panels on it, that's not something we really want, just because, you know, vacancies and stuff like that's a high risk. So that's just kind of one that's a red right now that's unlikely to be approved, and we recommend not to submit that and waste any time on that one. Okay, so you can change that back to for profit then.
Okay, it's already for profit. Let's do.
Or
Do you have
sorry,
an
yeah, so
example of where? Go ahead.
I was just going to say the owner occupied, you can change that back to yes. But like I said, the vacation short-term rentals, pretty much anything that a borrower, if they have an investment property and they want panels on it, that's probably not something we're looking for if it's a home. Okay, and then we can do the nonprofit no tax returns is another thing that's going to give a red here. So we've kind of found with nonprofits, the ones that typically they don't have to file tax returns because they are nonprofits, so they're exempt. But the ones that do file a nonprofit tax return, we have found are the ones that do generate some income to pay their debt. So that's why we would like to see nonprofits that do file some kind of return, because usually those are the ones that will qualify for our DSCR ratio and that sort of thing.
And as you can see here, Cooper, I just changed this from that they do
to yes.
file their tax returns.
Correct.
And what we now see is a manual, yellow here, manual review. Can you explain that a little bit more for the audience?
So it's not going to be a green because it is nonprofit. And like I said, nonprofits have some other stuff during underwriting that we have to look into. We have to look at, you know, members of the church and that sort of thing to see what kind of programs say the church offers or the nonprofit offers to kind of generate revenue to pay the debt. So that's why if they do have tax returns, it's not a red, but it's a yellow, because it'll take a little longer to review that stuff. It's not going to be the streamlined process that we talked about.
Yeah.
And then we can look at business not operational for 3+ years. So just because it's not operational for 3+ years, that's not automatically going to give you a red. But again, it'll give us a yellow down there. So it's, again, they haven't been operating for 3+ years, so we don't have as much information on kind of their historical cash flow, their historical financial performance and that sort of thing. So that's going to be one where it's going to be manual underwriting, because we're going to have to take a look at some other things to figure out if this is going to be viable for us, and if we think they're, you know, strong enough as they just started out to be able to pay us back and service that debt.
Yeah. So just to be clear for everyone, if they see a yellow, then they shouldn't walk away from the deal. They actually.
I would say most of the deals that we get probably would be yellow on this pre-screener. So I would say.
And if that. And what would they? So if they see that, what should the developer, the commercial developer, the installers from the installation company, what should they do? Should they?
I would say still go ahead and submit that app. Just understand that it might take a little bit longer timeline versus the ones that are, you know, those streamlined FastTrack kind of ones. So just be transparent with the customer about that in terms of like review time and that sort of thing, that it might take a little longer for an approval.
And we are willing to also meet with the customers, your customers as well, do
Yep.
joint meetings to discuss the project, to understand
Mm.
better their relationship and how their organization is set up. Some of them may have shell companies that they're using to real estate holding company for the building, but they actually are operating out of the building, but it's separate entities. Those are things that would consider a manual review because we have to look at the layers. So involve us early. Reach out to commercial. We'll have an email address at the end that we'll share with you that you can reach out to us to discuss those deals, schedule meetings with those customers, and we can understand better what their organization is doing, how they're structured, for us to be able to help move the deals through. Like Cooper said, most of the deals that we get are in that yellow category, to be honest with you. And we're able to process and go through them if we have a full and complete package. So big part of this, if we want to make sure you guys remember too, and you're going to hear us repeat it multiple times, is coaching your customers to have the documentation ready before they start the application. So when they submit everything, we're getting a full and complete package to review so we can actually go through that quickly with them. Because time is of essence too, right? You want to make sure you can close deals quickly.
Yeah, but to be clear, if there are questions by either from the commercial developer or from the customer, you guys are available to have those conversations, to help walk the customer through that, to even submit the application.
Yes, so we have an email group that's shared with the team for commercial solar, commercial solar at climatefirstbank.com, that you can email. We can actually review that. We can contact you. We can schedule a meeting to go over those deals with you. We're here and available to help you close more deals.
Okay.
Oh,
All
thanks.
right. So
There's a couple more that we can go through, just some red ones, Scott, real quick. So if you scroll up,
okay,
let's do
let's go back up.
let's go to the put positive net income for most recent full year. Let's put a no on that one. One down. Yep, there you go.
So okay, so let me do no there, but let's do, even if they've been operational, but they've got no profits. Okay.
Yeah, because obviously, if they don't generate any profit, they're not going to be able to pay us back. So that's just going to be a no from the get go. We want to see businesses that obviously are successful and profitable and that can pay any current debts that they have, and then also service the debt from our proposed solar loan as well. And then
let me ask here, then the next one here, right below that, let's say that it is profitable, but the majority owner, is it all owners? Let's see what happens here if they don't have a credit score above 680. So it says no. So that means that all owners that are over, I think you said 20%, require the 680 credit score, or how does that work?
So the majority owner must have over a 680. So that would be, so say there's a 50% owner, they would have to, if they have under a 680, it's going to be a no from the get go. If there's say like an 80% owner that has a 750, and then like a 20% minority owner has under 680, then we can still potentially work with the deal. So it's majority owner credit score.
Okay, got it. Cool.
So
okay,
yeah,
great.
those are kind of the ones there that would give us an immediate no go.
Cooper, thank you
All
for
right.
sharing about the tool. We do want to share too that this tool is still, we're improving it, right? So we want your feedback. Do you think that this is something that you're going to use? Is it going to help you be able to have those conversations? Share that feedback with us. And if you see there's opportunities to make it better, let us know as well. We want to try to capture that, to make this a tool that you can use every single time you have a conversation with a new prospect client to see if it's a deal worth pursuing. We want to enhance this tool to make it that way. Cooper and I have gotten a lot of questions from installers and customers too on like, why didn't this deal go through? So we thought this tool is a great resource to start that and help lead those conversations, where it was off the bat an instant decline just because they weren't profitable year over year, or the owners didn't have a credit score of 680 or more, things like that, or they haven't been in business for 3 years. Those are things that you should know up front, that if you're having those conversations, it's not worth your time having the customer submit that deal right then, because it's going to be a decline. That's a poor experience, right? But if you build up that relationship and you can share with them what that aspect looks like and what we're looking for this product, and you know that, then that will allow them to build that relationship with you. And once they get to that point, they can then come back and do the project with you as well. Something to keep in mind.
Absolutely.
And then I think we've got that. I think there was a question. I mean, it sounds like with commercial deals, documentation is key. And so can we talk about the documents that are needed so that the commercial developers know what to talk to their customers about?
Yep. Or Dima, were you going to cover the document?
No, if you can, go ahead and share with them
Okay,
the documentation.
Yeah, so like we said, like Scott was just mentioning, having the full document package is a huge key in the efficiency that we can underwrite. So again, drive that home as much as possible. So for these are for all of these streamlined for 500K. They apply to all, even ones over 500K. So these are kind of the base documents required for any commercial deal here. So the first thing we're going to want is 2 years business tax returns. So at this point in the year, some people might still not have their 2025s for their business. Some of them are not ready yet, especially for some larger businesses. So if that's the case, 23 and 24 business tax returns is fine. But at this point, everybody will have company prepared 2025 year-end tax, or not tax returns, sorry, company prepared financials. So that's something we're going to want. So 23 and 24 tax returns. If they don't have 25 tax returns, then a 2025 profit and loss and balance sheet. And then at this point in the year, we'd also like to have probably year-to-date financials. So through June, we'd want their profit and loss statement and balance sheet for 2026, which pretty much everybody should have something company prepared at that point. The next one is a big one that we see that's not submitted often. So this is one that, if you can really drive this home with your customers when they're filling out the application, is this debt schedule here. This is what we use pretty much to calculate their debt service coverage ratio, which we'll go over on the next couple slides. This just gives any debt that the company itself has that is being underwritten. So say like I gave the dentist's office as an example this morning, or a dentist practice. A lot of times we'll have loans for equipment, stuff like that. So we're going to want to make sure all that stuff is detailed out. We do have a template and stuff for that. So they basically just have to list who the debt is through, like what bank, say it's like Wells Fargo or something, and then just kind of the monthly payment and the maturity of the loan and stuff like that. So those are the things we want to see on the debt schedule. But this is a lot of times, pretty much every deal, it seems like we have to ask for this after the fact. So if you guys can get them to submit this within the application, that's just one step closer to an efficient application and a full package there.
Cooper, if I may chime in for a moment too, as part of the debt schedule, it is in the application like Cooper shared.
Yep.
Part of it is just letting them know.
Right.
Looks like Dima may have frozen there. So Cooper?
I can see in here.
Okay.
Yeah, you're good.
Okay. Okay, so anything else, Cooper?
Oh, Dima's still talking. I think you might not be the only one that can't hear, Scott. Absolutely. He might not be able to hear you. All right, I'll continue with the documents here. So, like we said, that debt schedule there is an important one, and then 2 years personal tax returns for each owner over 20%. So anybody that's over 20%, we're just going to want, at this point, pretty much most individuals have their 2025 tax returns. So we'd like to see 2024 and 2025. If it's a case where they don't for some reason, then 2023 and 2024 personal tax returns will suffice. And we want to make sure these are federal tax returns that they'd receive. We don't want state tax returns. State tax returns are fine too, but we want federal for sure. And then, like we said, all owners 680 plus. There's like a soft credit check that gets ran when they do the application, so that'll kind of immediately show us if they have that 680 plus credit score there, and we can continue on with the underwriting. So that's kind of the ones for the streamline. These are the base for all commercial applications there. So you're always going to need those for every for-profit application. The only difference for commercial for-profit deals that are larger than $500,000 is we just want this PFS, personal financial statement from the borrower. This is basically like a balance sheet for the individual. It kind of just lists their personal assets and their personal liabilities. So it'll have like their personal residence, any cash that they have in banks, any securities or stocks and that sort of thing, any 401ks, just pretty much all the
Mhm.
assets that they have individually and stuff like that, and then also liabilities like mortgages and that sort of thing.
Okay.
Um,
All right, we've got about 10 minutes left. I want to make sure we have enough time for questions as well, but can we quickly move to talking about that debt service ratio
yep,
so that
absolutely.
everyone
I'll try to
understands that?
get through this one as quick as possible since we're running out of time here. But yeah, so like we talked about DSCR, this is one of the biggest things that we look at when looking at approval for commercial deals. And this DSCR stands for debt service coverage ratio. And basically it at its core, it's how well the borrower can like basically utilize their business cash flow in order to pay their current debts and then also the solar debt on top of that. So for owner occupied, we require 1.00 debt service coverage ratio. So I'll give an example of what would be like an exact 1.00 debt service coverage ratio. So basically say this dentist office or XYZ, their net income, or we work off EBITDA, but net income is 100,000 for 2025 or whatever. And then say they have, you know, $80,000 yearly debt payments for equipment, stuff like that. And then their yearly debts or their yearly debt for our solar loan is 20,000. So add those together, that's 100,000 worth of debt, $100,000 worth of net income. That would be exactly a 1.00 debt service coverage ratio. So that would basically mean that their net income would be able to exactly pay off the total yearly debt that they have. So anything above that, so if the dentist office had 150,000 worth of net income for the year, then our DSCR would be 1.5 and so on. So we always want the income to be higher than their annual debts, basically, when we look at it from a kind of high level perspective.
Mhm.
And then non-owner occupied, we require a little bit higher of a debt service coverage ratio. We require 1.25. And like we said, that's just because those non-owner occupied deals are a little bit more risky and a little bit more volatile. So we
Mhm.
just like to see that higher level of debt service coverage there.
Okay. Mhm. All right, we've got about 8 minutes. I actually just like to move over to Q&A. There's been a whole bunch of questions and in the chat. I know that you guys have been pretty diligently trying to answer them as well, but let's just give the audience their time now to answer questions. So plop them into the chat. I've marked a few. I'm going to answer them. Or I'm going to pose these questions to Dima and Cooper. So one of them, there's a couple of times. How does the funding work? The disbursements and such. Can you explain that to the audience? Okay. All right. So there. Okay, great. All right, so we had another question here. I think it was about documentation tax. I'm going to interpret this with would you take the 2025 tax extension if the client has that? Or should they just provide the 2024 tax complete document?
Yeah, so I mean, honestly, if it's a tax extension, I would say we probably don't really need that as long as they can provide company prepared 2025 year end stuff. Because the tax extension doesn't necessarily show like perfect financials and
Mhm.
that sort of thing. So I think we'd rather just have the company prepared stuff until the actual tax return is filed.
Okay. I think this has popped up a couple of times. Can you talk about, explain the 3.75 cap? And does that apply just for solar only across the whole project? Can you explain that for the audience, please?
No batteries either. Yeah, just the PV itself.
Okay. All right, we'll get one more question in. All right, here's a good one. I think we'll end it with that last question from Angelica. Do you have a separate commercial ABL? My distributor CD has been having trouble finding the batteries on your current ABL. We requested a certain battery to be added. Renon like 10 weeks ago. Okay, great. All right, so there's a lot more questions. Just like Dima said, if you still have more questions, definitely contact Cooper and the commercial team. So just got 3 minutes left. So I've got one question for you, Dima and Cooper. So given everything that we've covered today, what's that one specific thing that you want every installer on this call to do this week? Dima, why don't you go first? What about
Yeah.
you, Cooper?
Yeah, I mean, I guess coming from an underwriting perspective, again, I know we drove it home multiple times, but that full package is everything for underwriting. If you guys have that full package, the customer has it right away. We can get deals out to you so much faster. There's no back and forth between us and the customer. So it's just going to make it faster for us, faster for you, and it's just going to be more beneficial for everybody. So
Oh, great. All right, I'll go last then. So mine's actually pretty simple. One is just don't spend time engineering on a commercial project unless it's already survived that the pre-screening financing question. So if you want to reach any of us directly, I am going to once again paste our LinkedIn profiles into the chat. We also have the commercial solar team's email. So go ahead and send your questions to Cooper and the commercial solar team. They're going to be there to be able to help walk you through these deals. And then, like Dima said, I'm going to follow up with the recording of this call so that you can share it with the rest of your team. It's also going to include the link for the pre-screening tool, but it's also include a one-pager kind of, I'll just call it a cheat sheet that covers most of what you saw that we covered today. So watch out for these emails in your inbox. And then if you like this session today, we are trying to put on a few more webinars through the rest of the year. So let us know what topic you want us to dig into next. Just send me that note on LinkedIn. And then one last thing, if you do need a break from all of the solar financing talk, we did make a game that called Solar Defender. It's linked in the chat. So go ahead and try to beat the high score that's there. And if you do, let me know and I'll send you a little gift. So thank you, Dima. Thank you, Cooper. And thank you everyone that's been, that joined us today on this webinar.
Thanks, everybody.
Oh yeah, ODU.